Imagine you could own a piece of the pie that grows in value over time, puts money in your pocket every month, and helps you build wealth for the future. That's the potential of real estate investing. Did you know that according to a recent study by Credible Source, single-family rentals in the US have historically appreciated in value by an average of around 4% per year? That means a property you buy today could be worth even more in the future, on top of the rental income it generates. Intrigued? This video will guide you through the exciting world of real estate investing, from understanding the basics to taking your first steps as an investor. Ever wondered how real estate investing works? In this video, we'll break it down into bite-sized pieces. First, we'll explore the reasons why real estate can be such a powerful tool for building wealth. Then, we'll dive into the nitty-gritty of getting started, from checking your financial fitness to understanding key terms. We'll also unpack different investment strategies like rental properties or house flipping, so you can see which might align with your goals. Finally, we'll cover crucial steps like market research and finding the right property to set you on the path to real estate success. Have you ever dreamt of an investment that could put money in your pocket every month, grow in value over time, and help you build long-term wealth? That's the magic of real estate. Rental properties can provide a steady stream of passive income, like a side hustle that keeps paying even when you're not actively working on it. And let's not forget about appreciation. Owning a property means you potentially benefit from rising market values, so your investment could be worth more down the road. Real estate can also be a great way to diversify your portfolio, spreading out your investments and potentially reducing overall risk. In the world of real estate investing, you'll hear terms like cash flow, cap rate, and return on investment ROI thrown around. Let's break them down. Cash flow is pretty straightforward. It's the money left over each month after you factor in all your rental property expenses like mortgage payments, repairs, and vacancy periods. It's the income you get to keep. ROI, or return on investment, is a broader term used across investments. It essentially tells you how much profit you've made on your investment compared to what you put in. Finally, the cap rate is a fancy way of looking at a property's potential return on investment. It considers the property's value and the income it generates, giving you a quick idea of its profitability. We'll delve deeper into these terms later in the video, so don't worry if they don't stick right away. Before diving into the pool of real estate investing, there are a few key things to consider. First, a good credit score is like your golden ticket. It shows lenders you're a responsible borrower and unlocks access to better loan options with lower interest rates. This can save you a significant amount of money in the long run. Having a sufficient down payment is crucial too. It demonstrates to sellers you're serious and reduces the amount you need to borrow. The more you put down up front, the lower your monthly mortgage payment will be. Understanding ongoing expenses is essential for success. Factor in property taxes, insurance, maintenance, and potential vacancy periods. Knowing these costs will help you determine if a property generates enough rental income to cover them and leave you with some cash flow. Now, let's talk about goals. Are you looking for steady monthly income to supplement your current job, or is your focus on long-term wealth building through property appreciation? These goals will influence your investment strategy. Rental properties might be ideal for generating cash flow, while fixer-upper houses with high appreciation potential could be a good option for wealth building if you're handy and have time for renovations. We'll explore different strategies in detail later to help you pick the one that aligns best with your goals. Laying a solid foundation is key to real estate success. First, a good credit score is like a key that unlocks better loan options. Lenders reward strong credit with lower interest rates, saving you money over time. Having a sufficient down payment shows you're serious and reduces your loan amount, lowering your monthly mortgage payment. Understanding ongoing expenses is like knowing your car's operating costs. Factor in property taxes, insurance, maintenance, and vacancy periods. These costs affect your cash flow, the money left over after expenses. Now let's talk about goals. Are you looking for steady monthly income, like a side hustle from rent, to supplement your current job? Or is your focus on long-term wealth building through property value appreciation? These goals will influence your strategy. Rental properties might be ideal for consistent cash flow, while fixer-upper houses with high appreciation potential could be a good option for wealth building if you're handy and have time for renovations. We'll explore different strategies in detail later to help you pick the one that aligns best with your financial goals. There are a few ways to play the rental game. Single-family homes are a classic choice. Think renting out a house to one family. They can be easier to manage yourself and may attract tenants willing to pay more for a private space. However, you're limited to one income stream and vacancies can hurt your cash flow. Multi-unit buildings, like duplexes or apartment complexes, offer the potential for multiple incomes from different tenants. This can be a great way to maximize your return on investment, but managing multiple units requires more time and effort, and you might need to hire property management. Flipping houses is a whole different strategy. Here you buy a fixer-upper, renovate it to increase its value, and then resell it for a profit. This can be lucrative, but it requires significant upfront investment, renovation expertise, and the ability to handle the risks of the housing market. Maybe direct ownership isn't your style? REITs or real estate investment trusts are a way to invest in real estate without the hassle of property management. You buy shares in a company that owns and manages income-producing real estate. REITs offer diversification and potentially steady dividends, but they also come with management fees and fluctuations in the stock market. We'll dive deeper into the pros, cons, and specifics of each approach later in the video to help you decide which strategy aligns best with your goals and resources. Being a landlord isn't all sunshine and rent checks. Budgeting for repairs, unexpected vacancies, and ongoing maintenance is crucial. Building a team of professionals like lawyers and property managers can save you time and headaches down the road. There will be challenges, legal hurdles, dealing with tenants, and the responsibility of managing a property. But with research, preparation, and maybe some professional guidance, you can navigate them. Remember, you don't have to jump into a mansion right away. Consider starting small with a single-family rental to gain experience. In the video description, I'll include links to helpful resources and my social channels so you can keep learning. Real estate investing can be an exciting journey to financial freedom, and this video is just your first step. So buckle up, do your research, and let's get started.